Línea, ok. Cara, ele participa tem linha por isso. Cara, se for linha por realidade.
Cioè, ma chiaro.
Realidade.
Mm.
Sei na realidade.
Cioè, it's
Yàtọ̀ gẹ́gẹ́ bí ọwọ́ bàbá wa rẹ̀ dán.
era
Ní ìtẹ́jẹ́ gbé pàdé rẹ̀. Yàtọ̀ tí kéèké tàn wá rẹ̀. Sọ̀tẹ̀ ayọ̀
Well, well, the first, ako po nga wala rin na dito. Ay, so manipulate.
Then it would be party. Yeah,
Nígbà tó tánú dá mi iná ẹgbẹ́ mi àrókò ni.
yeah.
Mhm.
My yeah, pick up.
this webinar. My name is Derek. On behalf of the FEM business community, I want to welcome everyone here. I will also ask you to please lodge your friends, business partners, colleagues to join the call. That's 1 hour plus. We'll be learning and clarifying things that has to do with the tax reform that will be taking effect from January 1st, 2026. I want to appreciate Alexander, Blessing, for joining the call as early as 6 a.m. thereabouts. Let's move DBS. Thank you for joining too. Um, um, our main coach for the day is also on the call. Going to meet us soon. So, family members, please reach out to friends, colleague. Let them join the call. But at about 6:30 on the dot, we are good to go. Like I also said, when you join the little ground rule, then I'll talk about the driver. Rename your device to show your full names. Mute your mic when you're not speaking, so we can minimize distraction. Okay, you can use headphone to reduce echo. Raise your hand to speak. When you raise your hand to speak, we'll spotlight you, then unmute you to avoid interruptions. As much as possible to stay engaged, turn on your video. Use the chat box to drop your comment, relevant comment. And above all, respect the opinions of other persons on the call. Thank you. Before I go any further, please confirm you can hear me by dropping a comment on the chat. Please confirm you can hear me. Okay, thank you, Destiny. You can hear me. All right, thank you. So, okay, thank you, Blessing. Thank you, Alexander. So, the FEM business community is a dynamic entrepreneurial ecosystem within FEM Foundation designed to foster connection, growth, and collective prosperity by empowering entrepreneurs to merge biblical values with business excellence, cultivating a supportive, prayer-driven community. Objective is very simple: strengthen collaboration and support among businesses, enhance visibility through periodic fair, facilitate mentorship, investment, and skill development. Membership is open to firm builders primarily with businesses or innovative ideas. This could be product-based, service-based, tech-based, or creative initiative. Program components include monthly meetups, networking and learning for networking and learning, quarterly business clinic, which provide practical support and insight, and capacity building workshop for growth and skill development. So we're using this to say those joining us for the first time, we're asking you to join this community where faith meet enterprise. And we are very interested in your feedback, even as we run through. This morning, I want to quickly read the profile of our facilitator. And she went an extra mile to make sure that when it comes to the engagement and interactive sessions, she's not taking it alone. She went ahead to invite a colleague. That's an extra sacrifice. That shows passion and commitment. Thank you so much, Ma, for that. Okay. Are we nudging our friends and colleagues? Are we highlighting the comments, the initial post on the WhatsApp? I can see someone is asking me for the link on the WhatsApp. If you're in business community, just help that person. Okay, she's an experienced professional in tax administration. With over 8 years of progressive experience in the field, she currently serves at the Joint Tax Board. She currently serves at the Joint Tax Board, where she plays a strategic role in supporting the executive secretary and advancing key institutional initiatives that strengthen tax administration and reform implementation. She is an associate of the Chartered Institute of Taxation of Nigeria and a certified data analyst for management from the London School of Business and Political Science. She also holds a BSc in biochemistry. She also from Benson University and an MBA in financial management, enhancing her expertise in data, policy, and fiscal strategy. Her public service journey includes her role as a special assistant on ICT to the executive governor of Edo State from 2011 to 2015, where she supported digital governance initiative and process optimization. In recognition of her capacity and commitment to national development, she was appointed to the secretary of the Presidential Fiscal Policy and Tax Reform Committee, inaugurated on the 8th August 2023 by President Bola Ahmed Tinubu CFR. The committee developed the policy and legislative proposals that shape Nigeria's new tax reform laws. You know where we are here now, including the establishment of the Joint Revenue Board. Following this, she now serves as a key member of the JRB Transition Committee, which is responsible for developing a comprehensive roadmap to operationalize the board. This roadmap is designed to align with the expanded function and mandate of the JRB and to ensure seamless transition from JTB to the JRB. Beyond her core professional responsibility, she is passionate about inspiring young people to challenge norms, become financially responsible, and emerge as transformational leader. Ladies and gentlemen, all this magnificent profile I just read is no other than the responsible, articulate, disciplined, a friend and a sister, Miss Victory Igariba. Please, with your digital round of applause, put your hands together for her. With this profile we just read now, you will agree with me that it's not just a novice that is coming to talk to us. It's someone who is in the team. In fact, her fingerprint is in this new tax reform policy. Her fingerprint is in it. So please, with your digital hand, please put your hands together. Welcome and recognize one who has journeyed through the ranks, through the ropes, and have come this far in national policy, taxation, development, and one who is growing every day. Ms. Victory Igariba, good to have you on the call right now. Ms. Victory, are you here? Yes, you are here.
Shalom, family.
Yes,
Shalom, Pastor. Sorry, 1 minute. I'm trying to turn on my camera.
Okay. So, are you good to go? I should give you some moments. Thank you. At my end, yeah, audible, but you can leave a comment you can leave a comment. Yes, she's audible. Yeah, you can hear. I can hear you. You may go ahead. We're going to have.
Okay, thank you. Thank you so much, everyone, and good morning again. It's such a privilege to do this. I understand what it means for most of us to wake up early on a Saturday where you probably just want to take an extra rest. So it also means that we genuinely need clarity on these tax reforms. So it's such a privilege, and I appreciate the commitment. I'm going to share my slides shortly. I believe I have the permission to. So over the last few months, we've heard a lot of misconceptions, opinions, interpretations, a lot of assumptions, which has even caused fear for a lot of people in the country. Some of us have seen some things on social media. Some of them are correct, some of them are just exaggerated, and some are not true. So what we're going to do today what I'm going to try to help us do is to understand the new tax laws that is going to take effect in January 1st, 2026. So we understand some things that have changed, what remains the same, what applies to us individually as businesses and the entire nation, and how we can also navigate tax matters intelligently in 2026 as the reform takes effect. I know that tax can be boring sometimes, so I'm going to make it as relatable as possible and keep it to the key things that concern us. So I'll just quickly share my slides, share my screen now. I believe we can see my slides now.
Yes, we can. Okay, yes,
Okay.
on slide mode. Perfect.
Yes. Yes. So, like I said, one of the things we're going to be doing, or part of the things we're going to be doing, is understanding the Tax Reform Act and its implication. We're going to look at things that have changed, why some of them changed, the benefits to us, and what is expected of us as individuals in compliance. So I'll just give us like a recap. Over the past few months, we've had issues, misconceptions, and all, like I said. In August 2023, the president and the federal government thought it wise to put together a tax reform committee. It was called the Presidential Fiscal Policy and Tax Reform Committee, headed by Mr. Taiwo Oyedele. So the purpose of this committee was to simplify the tax laws, make it more relatable, make it more compliance driven, and to make it easy for the average Nigerian. So in that case, the Tax Reforms Act were put together. So I'll just go through the outlines, what we're basically going to do today. So our journey today will be on the foundation of the reforms, which I've already spoken about, the 4 landmark tax reform acts that were passed, the objectives. I've spoken on some misconceptions. What changes for individual? What is the average individual expected to see under the Nigerian Tax Act? The tax exemptions, reliefs, then as it concerns the Nigerians in diaspora, the implications for digital income earners, what some people call content creators. Also on the tax ID, we've seen this on the media back to back. Do I need a tax ID? What do I need it for? And all. Then how do we navigate the tax compliance issues, then offenses and penalties, and then we conclude. So we've had I'll just name some misconceptions that I've heard over the past few months. Some people have said that tax money in your account will be taxed. There's no provision like that in the law. So I want to just reiterate it to put our hearts at ease. Then also, they've said the poor will now be taxed heavily. No. In fact, in these new tax reforms, minimum wage earners are completely exempt, and we'll come to that. We've also heard that businesses will suffer more. Some people have said, that means I'll shut down my business. No, actually, in this new tax law, small businesses will now enjoy the strongest incentives in all the years. Then some people have also said that taxes have increased. So the truth is that most of the taxes have even reduced, apart from VAT that remains the same. The rest are actually reliefs, and just to clarify the whole system. So this is the introduction, which I've already spoken about. There are different sources of revenue for government: taxation, borrowing, non-taxation revenues. There are grants, there are aids. These are means through which government makes revenue. And over the years, tax revenue has been an important government source of income to finance public goods and services. And in Nigeria, the current tax structure right now, what obtains now, we have different tax laws. We have personal income tax, we have companies income tax, we have Value Added Tax Act, Stamp Duties Act. They're all fragmented, as well as other direct and indirect taxes. And we know that tax is compulsory. Some people have said, what if I don't pay tax? Tax is compulsory. It is imposed by government to help defray the cost of governance. So in achieving this improved tax administration process, the federal government, like I said, embarked on a tax reform, and the new laws were signed. The bill was signed into law in June 26th of June 2025, which is earlier this year. So I was saying the objective of the Tax Reforms Act mainly is to consolidate. I said we've had fragmented laws, so the objective of this tax reform is to consolidate, simplify this existing tax framework that currently exists, harmonize the tax administration across the tiers of government. It also wants to promote economic growth, enhance equity, and digitize the entire tax administration. Specifically, this reform seeks to redesign the tax system in order to support business growth. It wants to eliminate multiplicity of taxes, because a lot of people have complained that, I'm paying the same tax in states, and local government authorities have also come to say, let's pay the same, they are paying the same tax, So this tax reform and this tax system is designed to eliminate that. We also want to clarify the ambiguous and obsolete provisions in the existing laws, reduce the tax burden on individuals and small businesses, promote the ease of doing business, facilitate sustainable and inclusive economic growth. So the entire tax reform is actually people-centric. The first thing the government thought about when they were putting together these tax laws is the people. It's also growth-focused. It wants to make sure that people can save, people can invest, people can spend, and also efficiency driven. So under these new provisions, in a nutshell, the low-income earners, which I'll be giving us what the government has now classified as low-income earners will enjoy full tax exemptions. It's zero tax for low-income earners. Middle-income earners will pay less, and multiple exemptions have been introduced for small businesses. So the government's approach on this is that they don't want to tax poverty. They don't want to tax siege. Government wants to tax prosperity. So if we look at the new tax laws, we're saying that it's actually targeted at the high net worth individuals, people who are already earning enough money to be taxed. So it's a progressive tax system. So I'll quickly go into the 4 landmark reform acts. And the first one is the Nigerian Tax Act. So this act this law is the one that tells us as Nigerians what taxes we should collect as a country. So all those CIT, VAT, stamp duties, and all, it's all been consolidated into this one act. So we no longer have separate laws or separate acts. So everything has been consolidated into the Nigerian Tax Act, which shows us or which tells us which taxes to collect as a country. It consolidates the tax laws, like I said, regarding CIT, PIT, capital gains tax, and all. They have now been they now have one coordinated source. So this will ensure ease of reference for the taxpayer, the tax authorities, and even the average individual. And the provisions in this tax act, the Nigerian Tax Act, also known as the NTA, are simple, business friendly. It reduces confusion, it prevents overlapping interpretations and also makes compliance clear. The second law is the Nigerian Tax Administration Act, the NTAA. So this, like the name suggests, is administration. So we know the taxes that we're going to collect from Nigerian Tax Act. So this act now says, how should we collect these taxes in a coordinated manner? How do I, as an individual, a business person, how do I register? How will I be assessed? If I have reasons to make refunds, how will the tax refunds be done? How will audits and enforcement be done? So it's telling us how these taxes will be collected, both for the taxpayer and the tax administrator. So it's putting together like processes, how will the money be collected, and what technology will be adopted. This will also promote ease of tax compliance, improve efficiency, and ensure uniformity in tax administration. The third one is the Nigerian Revenue Service. And what I tell people most times is that basically there are two major laws that you should focus on, which is number 1 and 2. Number 1 is what taxes am I supposed to pay? Number 2 is how am I supposed to pay? That is for the individual. Then the third one is the Nigerian Revenue Service Establishment Act. So this act states who should collect the tax and other government revenues. And by other government revenues, I now mean the levies, the fees, the fines, and all. Also, this Nigerian Revenue Service Act repeals the Federal Inland Revenue Service Establishment Act. We used to have a Federal Inland Revenue Service Establishment Act, and that was the act that established the Federal Inland Revenue Service, also known as the FIRS. So now the Nigeria Revenue Service Establishment Act is taking over that act, and there will be an establishment of the Nigeria Revenue Service. So come January 1st, 2026, of which it has even taken effect now, the Federal Inland Revenue Service will now be known as the Nigeria Revenue Service. So they are taking over the functions of FIRS and including the expanded scope to administer taxes that are currently being collected by various agencies. The fourth law, or the fourth act is the Joint Revenue Board Establishment Act. So the Joint Revenue Board Establishment Act is the act that establishes the Joint Revenue Board, which before now was known as the Joint Tax Board. So the Joint Tax Board, I'll just say the Joint Revenue Board Establishment Act has 3 independent bodies in it, which is the Joint Revenue Board, the Tax Appeal Tribunal, and the most important one, which is something that was just introduced, is the Office of the Tax Ombuds. We're going to go into the functions and purpose of the tax ombuds because it's supposed to be for the vulnerable individuals in the society. So the Joint Revenue Board Establishment Act basically provides oversight, taxpayer right protection, dispute resolution. And like I said, that act is the one that establishes the Joint Revenue Board. And the Joint Revenue Board is the umbrella body for all the revenue authorities. One of the key mandates of the Joint Revenue Board is to promote uniformity and harmonization in the administration of taxes, or should I say revenues now, across the nation. Then under that same act, we have the Tax Appeal Tribunal and the Tax Ombud. So like I said, the Joint Revenue Board is the apex body for tax administration across the country, Nigeria, with a mandate of ensuring uniformity and harmony in the administration of taxes in Nigeria. I hope I'm not too fast. Sorry, I'm not asking. I hope I'm not too fast.
I think you're good.
Okay. So with the new tax laws, the Joint Revenue Board will also be the hub, the one that manages the National Tax ID database for the entire nation. They are going to work in line with the NRS and other relevant agencies, as well as the other IRS, to ensure that this is done. Another function is that they advise tiers of government and all, but I'm not going to go into all of that. So the Office of the Tax Ombuds is one of the new agencies, or should I say that has been created by government. And because the government saw that most times people have issues, especially the vulnerable people of the nation, I have tax issues. I don't have money to go to court and be fighting one revenue service or one, how do I do this? So they created the Office of the Tax Ombuds. So the tax ombuds will be advocating for the vulnerable taxpayers. It's going to be protecting them. So people have issues, have an issue with Edo IRS, maybe a complaint, or I go there to request for my TCC or maybe pay a tax, and somebody's asking me for bribe or whatever. So the tax ombud is the person. The government decided not to call it tax ombudsman, so it doesn't look like they're being pro men and anti women. So it's the tax ombud. It can be a man or a woman, but the government has already appointed someone in that position here. So it's to protect the vulnerable taxpayers. So if you have issues for about taxes or complaints, the tax ombud is the place that you go to, and they're going to have offices in almost every zone. So I'm quickly going to go to taxation of individuals under the Nigerian Tax Act. We've established that there are 4 tax laws: the Nigerian Tax Act, the one that talks about the taxes; the Nigerian Tax Administration Act, the one that talks about how it's administered; the Nigerian Revenue Service Establishment Act; and the Joint Revenue Board Act. So taxation of individuals, one of the good things about this tax reform is that, before now, or what we're currently operating now, is that the government will say, okay, minimum tax, say you're not paying anything at all, but what you're going to pay as a minimum tax is 1% of your gross income. But in this new tax regime, it's 0. It's no longer applicable. So if you are not making money, if you are making a loss, if you earn minimum wage, if you earn below the threshold, which we'll see shortly, you are paying 0 tax. So individuals are liable to tax on incomes, profits, or gains accruing or derived only from Nigeria. Then people exempted from tax, like I said, minimum wage earners, they're exempted from tax if you earn an annual income of 800,000 and below. And by that, I mean the taxable income. So you might be earning, your gross income might be 1.2 or 1.3, but by the time you take off your allowable expenses, which for some people is like pension, NHF, insurance, and all, so your taxable income might come down to 800 or even less. You're completely exempted from tax. There's also the rental relief that has been introduced. The rental relief is also to reduce the burden on taxpayers and people. We've seen the rising cost of accommodations nationwide. I don't think it's peculiar to a particular state, nationwide. So the government has said, okay, let's get you a relief for those who pay rent. So it's 20% of your annual rent or 500,000 naira, whichever one is lower. We're going to knock it off what you're going to pay and then get your taxable income. So of course, we're going to have to bring proof and the rest. A lot of people have asked questions around, let the government just give everybody 500,000. Yeah, some people are not paying rent. They're not going to enjoy that. And some people, for example, if your rent is 1 million naira a year, 20% of that is 200,000. So the loss is 500,000 naira or 20%, whichever one is lower. So you're only going to enjoy 200,000. So the whole idea is to bring the landlords, especially the high network landlords, those who are collecting rent of 100 million, 50 million in Abuja, in Lagos. I don't know if anybody's collecting rent of 50 million in Benin. Yeah, so that's the whole idea. Then also There's benefits in kind, valuation of accommodation is now restricted to 20% of the gross pay, excluding cost of providing the accommodation. So this is the new tax table on the left, and I think I forgot to share the tax calculator the last time. So I'll share the tax calculator. We can easily calculate by ourselves, our HR and accountants, whatever firm. So this is the new tax band. The old one, I'll start with the old one, which is on the right. I hope you can see the screen because I think people are scribbling on it unintentionally. Yeah. The old tax band was the rate was from 7% to 24%, which you can see to the right of the screen. And the old tax band was taxing people at the first 300,000 naira you make was at 7%. Now this new tax band is the first 800,000 you make, So if I'm a salary earner and I earn 800,000 naira annually, I'm going to be taxed at 0%. My next 2.2 will now be taxed at 15%. So even if I make, let's say, 3 million naira annually, the first 800% will not be taxed. It's at 0%. So a lot of minimum wage earners, low income earners are going to be taxed at 0. And even for the next 2.2, down to, I think, maybe 13 to 15 million annually, it's all reduced tax rate compared to what we currently operate. So that's one thing that the government has done for individuals. And I think I have a slide that shows, okay. So this slide shows your taxable income after deductions. Like I said, we have some deductions, pension, NHF, NHIS, if you have interest or mortgage, if you have life assurances. Once you've deducted all of that, you have your taxable income. So if your taxable income is 800,000 naira, you are paying tax at the rate of 0%. That means there's no tax liable. The next 2.2%, you are paying 330,000. The next 9 million naira, you're just paying 1.620, and so on to above 50 million. Then I have a slide that shows, I hope you can see this. So if we look at this table, up until E, which is 20 million, we can see that there is reduced tax rates. You see the variance, which is minus 3.0. There's reduced tax rates. If you see the table that has the PITA and NTA, you can see 17.92 which is what we currently operate. And with the Nigerian Tax Act, which is kickstarting next year, is now 17.63. So it's just something that we can go over even with our tax calculators, and just to show that the government is in this new tax reform is people-centric. They understand the challenges that people may be facing now, and they want to make sure that they are not taxing poverty. There's no point collecting money from people that are probably managing or just barely surviving. So that's for the tax band and the tax table. So the new tax rate is now 0 to 25%, focusing more on the high net worth individuals. Then I'm going to speak on some tax exemptions that will benefit the masses under the tax reform laws. I've already spoken on some. So the first one is under the personal income tax, or what we call pay-as-you-earn scheme. Individuals earning the minimum wage, like I said, or less, is completely exempt from tax. So if you have an annual gross up to 1.2, and 1.2, like I said, after you take off the deductions, it will translate to about 800,000 taxable income. You're also exempt from taxes. Then if there are reduced there are also reduced payee taxes for those earning annual gross income up to 20 million, which is what I explained from. Okay, I thought someone asking a question, which is what I explained from that table. Then also gifts are exempt from tax. So if I send somebody a gift, or I send my parents allowances, or they're exempt from tax. And I need to put a clause there to say that something is not a gift just because you say it's a gift. Some people exchange value. For example, you do something for me and I pay you for it, and then I've heard people say, so everything I put now in my transaction, I'll just put gifts. It doesn't work like that. The tax man will obviously query it. So if there's no value exchange, that's when it's gift. That's when it's a gift. So we also have allowable deductions and relief for individuals, which I spoke about. There's pension contribution, national health scheme, national housing fund contribution, interest on loans for owner-occupied residential housing, life insurance, yeah. Then the rent relief, which I spoke on. Pensions and gratuities. Pension funds and assets under Pension Reform Acts, they are tax exempt. Pension gratuity or any retirement benefit granted in line with the Pension Reform Act is also exempted. Then compensation of loss of employment up to 50 million is exempt. So this makes job loss transitions financially safer. Then on capital gains tax, if you sell your own home, residential house, it's exempt from CGT. If you sell your own personal effects until 5 million naira, it's exempt from CGT. If you sell up to 2 private cars in a year, it's exempt. So the government is not trying to dissuade us from savings or investing or owning your own property. Then also gains on shares, the new law says gains on shares below 150 million per year or gains up to 10 million is completely exempt. So only when you now make gains above 150 million. I've heard people talk about these shares, things and all. So how many people really buy or sell shares above 150 million? That means you're a high net worth individual. So that's where the government wants to tax. So gains on shares above this exemption threshold, if the proceeds is reinvested. So even if you sell and then you now reinvest, you are still exempt from tax. Then pension funds, charities, religious institutions, churches, as long as they are not going into business. NGOs, they are tax exempt. You are not making income from it. You are not using it for businesses. It's all exempt. Then for companies income tax, the new law has classified companies into small and large companies. So for the new law, come January 1st, small companies will now be those that have turnover of 100 million and above. And small companies are those that have turnovers of not more than 100 million and total fixed asset not more than 250 million. So anything above 100 million is classified as a large companies. And then we've had questions surrounding, should I make my company a limited liability or should I stay where I am because of the incentives? So they are liable to pay zero tax. So if you're a small company, that means you don't earn up to 100 million as turnover in a year. You are not paying any tax. The government has also said, if you are making a loss, you are exempted from tax because what are we taxing? Do we want to close down your business? And like I keep saying, the government doesn't want to tax poverty. The government doesn't want to tax seed. The government wants to tax your prosperity. And these incentives they've put together for small companies is so that they can grow. And then in turn, they can employ people, and then is to ensure a prosperous nation. So eligible startups, the law states eligible startups, they are also exempt. There's also compensation relief, that's 50% additional deduction for salary increases, wage awards, transport subsidies for low-income workers. So those who earn minimum wage or low income, sometimes their employers might say, oh, this money, we know how the country is. Okay, let me add 20,000 naira or 30,000 naira as wage award. Those monies will not be taxed. There's also employment relief, 50% deduction for salaries of new employees hired and retained for at least 3 years. Tax holiday for the first 5 years for agricultural business. That's also one of the exemptions from company income tax. Then gains from investments in a label startup by venture capitalists, private equity funds, accelerators, or incubators. Then for development levy, before now, we had a lot of earmark taxes, education tax, technology levy, NASENI levy, and all. They were collected at national levy before people paid this certain agencies pay these taxes individually, and they pay almost 6%. What the government has done now is just to impose a rate of 4% on everything. So it's altogether called development levy. And also small companies are exempt from this tax or this levy. Then for withholding taxes, small companies, again, those who earn 100 million and below for turnover. Manufacturers, agribusiness are exempt from withholding tax deduction on their income. Small companies are exempt from deduction on their payments to even their suppliers. Then for value added tax, the rate remains the same, 7%, 7.5%, and 0%. And there are a lot of zero rated and VAT exempt items. Rent is VAT exempt, education services. If we go through the acts, and what I said is that I'll share the soft copies of the gazetted acts with us. So it depends on your area of concentration. You can look at it. So on VAT, there are more items than this. Pharmaceutical products, small companies, like I said, they're exempt from taxes. Diesel, petrol, all of that. Refund on VAT. There's now a refund on the VAT that you may have paid for maybe zero-rated products. There's purchase, lease, or hire of equipment for agri purchases. It's exempt. Disability aids, transports, I can go on and on, sanitary towels, baby products, and all. The list is a lot. Then for stamp duties, electronic money transfers below 10,000 naira, salary payments, intrabank transfers of government securities or shares, documents for transfer of stocks and shares, they're all exempt from stamp duties. So I'll quickly go on to the impact of this tax reform on Nigerians in diaspora. So if you're a remote worker or you live abroad, you earn money there, and you bring back that money into your country, it's tax exempt. We've had questions of, they said the money in my account will be taxed. They said if I send money home, it will be taxed. Again, tax is paid on the income end. So if you didn't earn your money in Nigeria, please, you can send it. You can send it to your account here. It would not be taxed. Nigeria also has a double taxation agreement with some countries, which allows you to be exempt from tax. So there are some countries Nigeria has double taxation agreement with, I think the UK, France, Kenya, and some other ones. So if you've already paid tax in those countries, when you come back home, you are not going to be taxed because of the double taxation agreement. Nigeria also has an agreement with over 100 countries to track remote workers, because some people have said, how would they know that is my income? How would they? So like I said, one of the things with this reform is the government has invested in technology, so that's why they're linking all the IDs, the BVN, the NIN, the TIN, whatever ID you had before is now going to be linked as one tax ID. And the Joint Tax Board is working in line with other agencies on that. So like I said, on diaspora remittances, genuine personal transfers, money that you send for family support, for gifts, community contribution. This person is doing something, I'm sending you my contribution. They are not classified as taxable income for either you who is sending it or the person who is receiving it. And like I always tell people, it's good to err on the side of caution, ensure proper documentation. So when you're sending those gifts, because you might not remember in the next 2 years what this money was for, it's good to keep evidence and put a description to those things so that you can establish accurate classification, even if the relevant tax authority calls upon you for that. Then the implications for content creators. So the primary implication of Nigerian tax, the new tax reform laws for digital income earners, which includes the content creator, is the same for almost everybody else. They are required to file, declare your income. Most people have issues when they don't declare. So when the taxman comes for you, maybe 2-3 years down the line, and then you're now explaining that no, this money out of 1 million naira, this one was actually for my equipment. This one for is it now feels like, why did you not declare it before? So it's important that you declare your income, because like I've said, technologies and things are in place now to fish out, for want of a better word, people who are not complying with their taxes. So it's important you declare your incomes and your earnings and pay your personal income tax. So the new law has placed the onus on you as a digital income earner to declare your income to the relevant tax authority. Digital income earners like content creators registered at businesses with a turnover exceeding the small business threshold will register and remit for VAT. So if you are registered as a business, a small business, and you don't have a turnover of up to 100 million, again, you are exempt from tax. Also, gains derived from the disposal of digital and virtual assets, such as cryptocurrency, NFTs, are now subject to CGT. And then I put a note under this, and I don't know if my colleague is here already, but he will throw more light on this.
Yes,
So
it's
under
on
the
the call.
current tax, oh, okay. Mr. Aragon, you're welcome. I don't know if you can hear me. Okay.
Thank you,
Under the
Vicky. Thank you, Vicky. Good morning. Good morning, everybody.
Okay. Good morning, Mr. Aragon. Okay. So under the current tax regime, chargeable gains are now treated as part of the taxpayer's income, So you are adding it to all the incomes that you've said you've made, and then before you charge your taxes, after taking off all the allowables, of course. So accordingly, when a gain is realized from the disposal of an eligible asset, such gain is aggregated with all other sources of income, which I just explained, of the taxpayer. You are now assessed at the applicable income tax rate. So if it's for company income tax, obviously if you are a large company, 100 million and above, you now be charged to tax at that percent. For now, it's 30%, but I think the government is looking into the next 2 years to see how it goes, and they'll reduce it to about 25%. But for small businesses, it's 0%. For individuals, it will be charged at that band, 0 to 25%, depending on where your taxable income falls. So that means the total income, inclusive of chargeable gain, forms the tax base for determining the tax liability, rather than subjecting the gain to a standalone capital gains tax like we've had in the past. Then for taxpayer identification, and this is one question we've also had back to back. The tax ID is the term that unifies the different things issued by the FRS, the JTB, IRS. Some people have said, oh, I was issued one thing in Lagos. Does it mean it's now useless? I was issued one in Edo State 4 years ago. Is it now useless? No. It's for the JTB and Nigeria as a whole. We're collaborating with the NRS, and we're designing a form of mechanism where the tax IDs will be automatically generated using those foundational identifiers that we already have. So if you have your NIN as individual, automatically your tax ID will be generated. So that's the system we're setting in place. And we're hopeful that by the beginning of next year, that will be done. So your TIN is not entirely useless. Mr. Harrigan will speak more on that. Thank God he's here. So for the companies as well, once you have your CAC, which is already your foundational identity, your tax ID will be generated for your company, and that's what will now be used. And the law mandates that every taxable person should register with the appropriate tax authority to obtain a tax ID. So if you are in Edo State, if you are in Lagos State, if you are in Ogun State, you register with your tax authority to get a tax ID. Then if you're not in the country, we also have a link for those in diaspora. You don't necessarily have to come down to get, I've heard some people say, oh, I need to come to Nigeria to figure out this, my NIN and tax ID stuff. No, we have a link. I'm sure we'll provide it as we go on. So the law also mandates that banks and other financial institutions, I think that's section 29 or so, they're required to request a tax ID from taxable persons. Individuals who do not earn income or are not taxable persons are not required to obtain a tax ID. Okay. I also wanted to add that there's also a requirement from banks and other financial institutions. Yes, that's the section 29 I wanted to talk about. For the reports of the I think is turnover or reports of individuals who have a cumulative sum of 25 million naira, and also for corporate bodies, which is companies that have a cumulative sum of 100 million naira within a quarter. So that's what banks will be operating as from next year. It's been in the law, but it's now that most of these things will take effect. So the process is ongoing, like I said, for the tax ID, the automatic generation, and we've reached an advanced stage at the JRB. Remember, I said that the JRB is the hub for the tax ID, and the implementation is set to take place January 2026. Then for individuals and companies, how do you navigate tax compliance issues in 2026? So one of the things I want people to know, or we want people to know, is that proper bookkeeping is essential. Good record keeping will protect you during audits. For a lot of people, they'll tell you that, no, I don't do transfer. No, I don't do this. No, I don't have receipts. So when the taxman comes, or when you're trying to explain your bank account, you can't even explain most of your transactions. So it's important that you keep accurate records, keep your receipts, track your expenses, avoid irregular transfers. Some people have the habit of saying, oh, this is my business account, but I don't know, it's not working now. Just send it to my personal account. Or my personal account is not working now. Okay, and Pastor Derek, just send me that money that you're supposed to send it to my business account. And then tomorrow the taxman comes and they're asking you for your financial statement, and you're saying, oh, I've not been doing business for 2 years, but we're seeing transactions back and forth in your business account. It will be very difficult for you to explain that to the taxman. And the Nigerian Tax Act says that for all practical purposes, the income of a person chargeable to tax under this act cannot be ascertained. So where records are not kept in such a manner as to enable proper assessment of income, then such a person shall be assessed on terms and conditions as may be prescribed by the minister on the advice of the JRB in the regulation under a presumptive tax regime. So because we can't assess your records, we don't even know where you fall. The taxman doesn't know where you fall. So you'll probably be charged under the presumptive tax regime. And of course, like every law that is passed, there are fines and penalties, and they are not set to, punish people per se. They are set to put discipline. So it's expected that we just do the right thing. So there are offenses and fines, there are penalties for failure to register, because it's expected that you register. If you also award a contract to unregistered persons, if you fail to file your returns, and I've said before that, the fact that you're exempted from taxes does not mean that you should not file. So you should file. If you don't file and you're exempted from taxes, you will pay the fine or the penalty. So there's also a fine or penalty for failure to keep proper books or records. So if you also fail to deduct withholding tax, and also if you go over, this is just some of the offenses and penalties from the laws, most of which are not new. They've been there over time. There's false declaration. There's also a penalty for, if the tax authority cannot assess which category this your offense even falls into. Can't remember where that is now. Yes, there's also a penalty for that. And then in conclusion, the overall tax administration in the country will experience significant changes when these reform acts are implemented come 1st January 2026. But taxpayers, especially the low income earners, will enjoy some level of tax relief, as we have seen, to ensure that there is fairness and equity in taxation of income. So this is so because the focus is now on taxation on the high net worth individuals and to ameliorate the burden of the middle and low income earners in line with global best practice. Thank you. I think we'll be taking questions now.
Wow, fantastic.
And okay, sorry, Pastor Derek, before we take questions, Mr. Aragan, is there anything you want to add to it, especially as regards the CGT and also the virtual assets? I wanted you to chip in something.
Okay, thank you, Vicky. Thank you, guys.
Can we see you, please? Please.
I'm still in, but okay, I'm coming.
All right, continue. But
Yes,
in the course of question and answer, we'll get to see you, please.
So, I think Vicky has really addressed the issues around CGT. If we recall, previously CGT was charged at a flat rate of 10% on the gains from every asset disposal, every chargeable asset disposal. But the new regime entails, like Vicky said, that these chargeable gains are to be aggregated to the total income of the individual or the company prior to assessment to tax. That's why you find out that what's out there is that CGT for companies is 30%. That's as a relationship with the 30% company income tax that the companies pay. And for individuals, it ranges between 15 to 25%, depending on the tax band that the individual happen to fall within. So most people have expressed concerns about how this can be implemented, given the fact that we really do not have that deepened tax culture as of date. And there are conversations around implementing a withholding provision. So at the point of disposal of your chargeable assets, a certain amount is withheld, then at the point of assessment to tax, the outstanding amount is paid up, or if the tax officer or if the taxpayer is due for any refund, such happens. So this aligns the old capital gains tax regime with the income tax principles both for individuals and companies, and it's also happened to be some sort of relief for the low income earners as well, because you find out that in most cases what will happen is even after some low income earners have computed their chargeable gains as part of their income tax, they may probably fall below the taxable threshold. So it's another form of indirect relief for individuals and small companies as well, one that is not always spoken of. Virtual assets, yes. Prior to now, that has been a very opaque area for the tax authority, but with the reforms is trying to provide some visibility in the transactions that go on in that space. So
Sorry, Mr.
first of
Manuel,
all,
sorry.
yeah,
Can you
yeah.
simplify virtual assets with examples for the purpose of
Okay,
audiences
well, we're
to
talking
understand?
about virtual assets. We're talking about instruments like Bitcoin, electronic money, tokens, and all the others that similar in that regard. So we have a lot of people carrying out various transactions on the Bitcoin space. The blockchain industry has grown over the past few years, and the volumes of transactions from the data available to us is that Nigeria is actually one of the countries where such volumes rank as one of the highest globally. So the potential for taxation is quite high, but because of the lack of visibility of that sector, it's been quite a challenge for most revenue authorities to actually take advantage of that sector. But right now, the laws have provided provisions that make it an obligation for operators in that sector to first of all register with the relevant tax authority, and subsequently to file their returns, which entails that all the income generated from such activities are at the knowledge of the tax authority to enable for appropriate tax administration action on them. So that aside, the law also places an obligation on the providers of virtual services to render certain returns on a periodic basis. So what we have now is an approach from two angles. First of all, as an individual or a business name carrying out such activities, you're expected to register. And secondly, the service providers themselves are expected to render returns on a periodic basis to the relevant tax authority. It's a new terrain. We're just walking into the terrain for the first time as a tax ecosystem in the country. We know there may be a couple of challenges, there may be a couple of hiccups, but we believe that with the good-mindedness of Nigerians and with the professionalism of the relevant tax authorities, we'll be able to navigate these early days of taxation of that sector. So I'll leave it here for now, pending when the question starts coming in.
All right, thank you very much. That's Mr. Emmanuel Arega, Head of Tax and Technical Department, Joint Tax Board. Thank you, Victory, for making this happen. All right, family, those on the call, it's time for questions and answers. What you do, you raise your digital hand. I'll spotlight you and unmute you. Other than that, you can drop your questions on the comment section. Before I get people who raise their digital hands, we have some questions on the comment. Okay, Sayuki, that was fast. Okay, so, hey, dear man. Okay, just keep raising your hand. When you answer your questions, when you ask your question, rather, you drop your hand. Let's go to the comment section first. The first question is from Chidima Okpoko. He said, how about mutual funds? I think that question was asked when Victory was talking about the, I can't remember, but I know where she wrote that. How about mutual funds? Will it be tasked? That's what that is. Then the second one was from God sent SZA. If my salary is paid directly to my personal account and I have premium and rent to pay, how do I go about it? The third one is if I do daily contributions and the money is being paid directly to my personal account, what's my fate and how do I exempt paying too much tax? I will allow these three questions to go first, then I'll go to those who raise their data hands before I come back to the comment session. So Victory, Mr. Emmanuel, we have three questions first.
Mr. Emmanuel
Okay, let me address the questions. Maybe you may have to
Okay.
do a recap of the question number 2, but I got the question 1 and 3. So it said, what about mutual funds? Will they be taxed? Yes, they will be taxed because your investment is yielding an income. So what will be taxed is the income on your investment. Is the profit, I mean, sorry, is the profit on your investment, not the entire investment. So for example, you have a principal sum of 100 naira, and maybe at the end of an expired tenure, you have an interest accrued of 10 naira. The 10 naira will be subject to withholding taxes. And expectedly, while you're filing your returns, you are supposed to declare that income as well. So what that does is when you're faithful in declaring your income, you have a possibility of a tax refund at the end of the day, you know. So yes, mutual funds will be taxed at the prevailing withholding tax rates, the interest component of your investment, and yes, you are also obliged to make a report of that while you're filing your returns as an individual or as a company, because companies also carry out investment activities as well. Then the third question about thrift collection, will thrift collection be taxed? Yeah, I think I got into the call on time to hear that Madam Vicky had the need to have a proper description of your transactions. So when the transactions are properly described, at least you have a fighting chance of convincing the relevant tax authority that this is not income per se, but it's a derivative of some thrift activity. I think she was also clear about the fact that we should establish a delineation between personal accounts and operational accounts. So from the onset to the person who asked the question, if you're involved in such activities, have a dedicated account for that particular activity, and it shouldn't be mixed with your personal daily running account. So when the taxman comes around, you can have a chat and let them know with evidence that this account is run as a thrift business. So the necessary reliefs will be granted to that. But if you cannot show clear evidence that it's a thrift business, I don't know. Well, we don't want that to happen anyway. But be clear about your transactions and ensure that business transactions are separate from personal transactions.
Okay, thank you. Let me read the number 2, then I'll unmute Osayuki Omori. He said, if my salary is paid directly to my personal account and I have premium and rent to pay, how do I go about it? Is it clear?
Yeah, premium, I guess that may be for a life assurance policy, and you have rent to pay. Yes, you go ahead and make those payments, irrespective of those are your obligations. But what happens at the point of filing your returns, those are already given to you as eligible deductions. So when your total income is computed, the sum of the amount that has already been paid as premium and or rent will be deducted from your total income as a relief. So that's the sum of that amount will not be subject to tax. So that is the essence of having that item as well as other items on the eligible deductions lists as reliefs. So I think that answers the question.
All right, thank you. Osayuki, I will mute you to ask your question. Faith God, Chidima, Grace, I see your question in the comment section, but let's take this set of oral questions. I'll come back. Osayuki, please go ahead. Ediame, get ready.
Okay, thank you so much, Pastor Derek. Thank you very much for the insightful lecture. There's a question I want to ask, and this question is actually in 2 scenarios. I want to ask if tax paying is now consolidated. I'm going to ask this in 2 scenarios. The first scenario is that I'm a state government public servant, and will I be double taxed, or will it just be like a consolidated tax paying structure? Then for the second question, for example, if I'm running a pharmacy business, when I'm running a pharmacy business, you have people that come from state government, from local government, and they say, oh, you have to pay a certain tax. What are the provisions for that? Are we supposed to pay? Or are we not supposed to pay? Or when you have your team, you are supposed to pay through just one source. So that's the question I want to ask, because for we in state government, public and civil service, a lot of us have been scared if we are going to be double taxed. So I need clarification on that. And on the second question, if we are still going to be paying the provisions for state and local government taxation for business owners. So that's my question.
Thank you very much. Ediame, I'm asking you to unmute, but you're not responding. If you're on the call, please unmute. We'd like to take 3 sets of questions. Okay. Ediame, please take your question. Mr. Emmanuel and Ms. Victory, I hope we are taking note of the questions.
Can I go ahead?
Yes.
Oh yeah, Ediame, please go ahead.
Okay, my own is just for clarification. The first one, you said a question was during the course of your teaching Victory, you mentioned like the first 800 won't be taxed, then the second 2.2. So what I'm trying to understand is from the 2.2, is it that the first 800 out of it won't be taxed, while the remaining 1.4 will be taxed? That's my question.
Okay. Not to overload it, let's take this set of questions. Then Osaze, I'll come back to you. Osayuki, you've asked your question. Kindly lower your hand. Thank you.
Okay. Osayuki, is tax payment consolidated? Will I be double taxed? By the grace of God, you won't be double taxed. So let me try and put it in perspective. Your personal income is subject to personal income tax. So what you earn as a salaried worker, at the end of the month you get paid, will be subject to personal income tax. The profit you make as a business owner will be subject to personal income tax. Now, there are also other taxes that the individual, that the taxpayer is liable for. If you carry out transactions on dutiable instruments, you will be subject to a stamp duty tax. That is not personal income tax. If you dispose of chargeable assets, you may be subject to the capital gains tax aggregated into your income tax. If you carry out eligible transactions, you may be subject to a withholding tax. There are sales or purchases that you may engage in, you will be subject to a value-added tax. So there are various tax types, and where the information is available, just the tax type that a taxpayer is liable to is what is being paid. But for your personal income tax, which is the one that most directly relates to you and me, it won't be double taxed. I can assure you of that. Then the issue of collections by various agencies and parastatals of the states and local governments. This has always been a huge challenge, and from our part of the divide in tax administration, in national tax administration, we've always seen this as a challenge because we feel that the burden of collectibles for the individual or businesses is quite humongous. This is just a correlation of our current tax system, which is multi-tiered based on our unique federalism. You have federal taxes, you have state taxes, and you have local government taxes, levies, charges, rates. So the fact of the issue is that most of these collections, taxes, levies, and rates have been provided for in the Constitution. And where the Constitution provides a collectible item for any tier of the government, be they federal, state, or local government, it is the responsibility of that government to ensure that such collections are actually done. So we see multiple agencies, you see the Ministry of Environment coming for their environment checks and charges. You see Ministry of Commerce coming for their business name and stuff. You see various collections on one taxpayer. We feel this is not totally right, but we are at the moment hampered by the provisions of statutes, of statutory laws and the Constitution. But what we're trying to do at the point of the Joint Tax Board, recently we designed a harmonized taxes and levies act. Previously, when you compute the accumulation of collections at the state and local government, the number above 50 different items that the taxpayer is expected to make remittances for. We felt this was too ambiguous, it was too unwieldy, and created some sort of burden on the taxpayer. So we set about to undertake a harmonization of these collectibles, and with the efforts of all concerned, we were able to come up with a document that has collapsed all of these collectibles into just 9 items. Now we're talking from 50 to just 9. So we expect that in a year, a taxpayer shouldn't be expected to pay for more than maybe 6, 7, or 8 items, as the case may be. And we believe that this will to a large extent, reduce the incidence of multiple taxation or the notion that the taxpayer is being taxed multiple times. This document is currently undergoing legislative process at the various state levels. And when we hope that when it gets legislated on, it will significantly reduce the burden on the taxpayer. So hopefully it's our expectation that this will happen across the length and breadth of the country, pending when more far-reaching interventions are made via constitutional amendments, because what we're just doing now is just to harp on the collaboration between the states and the local governments. A stubborn local government will tell you that I have the constitutional authority to collect this tax. You cannot tell me not to collect this tax. But we're leveraging on the overall objective of the ongoing tax reform, which is to make compliance easy and simple for the taxpayer. A taxpayer should be happy to pay their taxes, and inundating them with multiple collection types, instead of 10 person coming to pick up different taxes, I should just have to pay one time and forget about the responsibility until the next year. And that is where we are driving at, and hopefully we will get there sooner or later.
Thank you.
Thank
so
you very
much.
much.
Thank you so much.
And
Okay.
Hidiame asked about the 800. Yeah, about the tax ban. So
sorry. Before you continue,
okay.
We have a lot of questions on the comment section. Another question we are raising against time. So
okay,
maybe we can make it.
Let me speed up. Yeah, I'll try and speed up. Okay. So let's say, for example, you have an income of 4 million naira. So 800,000 naira, the first 800,000 naira is taken out. You are left with 3.2 million naira. The 15%, 800,000 naira has been given to you as free money. Just take it away from your money. We will not tax this one. So the outstanding amount is what will be subject to the subsequent bans. So inside that 3.2, 2.2 million inside the 3.2 will be taxed at 15%. After you've taxed 15% from the from 2.2 inside your 3.2, remember that 2.2 is taken away again. They've already that amount has already suffered tax. So you're now left with 1 million naira. So the next category for taxation is the next 9 million naira. So that 1 million naira falls into the bracket of the 9 million, of the next 9 million, So it is that next percentage tax rate that will apply to that outstanding 1 million with you. So when a particular set of amount has already suffered its percentage of tax, it is not taxable again. So an income of 8 or 4 million naira, 800 naira is 0%. You take it out. The next 2.2 million naira is 15%. And the outstanding 1 million naira, which happens to fall into the next 9 million, is charged at 18%. And so on and so forth. So
all right.
I hope that was clear enough.
It's clear. And that is why we have the Fem Business community. I did state the objective when we started. Obviously, this presentation will not be able to answer all your questions or give you full understanding, but the forum is open for continuous conversation. Take advantage of it. Because we're running for time, we need to engage further. So, Ms. Victory, you have some questions from the comment section you're going to answer. Joseph Osawaru and Usaze, I'll come to you to ask your question after now. Let's take the questions from the comment section that says, The first one is, it says, if I also I said you ask your question orally, so let me leave that. Let me go. Please, will my account be taxed when I pay into accounts? That's coming from Blessing. Precious Lato say, thank you so much for the question. A little clarity of virtual services, please. Faith Scott says, how do you register to get your TIN number? Chris Labaran, if I give out loans to people and my yearly disbursement and interest is not up to 100 million, will I be taxed? If not, how do I declare my exemption? Let me add one more. Do I need to upgrade my business from a sole proprietorship to LLC because of the new tax regime? Chidima will take your question as a UN staff. UN staff don't pay income tax. Would this change in this new tax regime? How do I declare my income?
Sorry, Pastor Derek, the first question you said, should I pay? What if I pay? I didn't get that question.
Let me go to that. Will my account be taxed when I pay into account? Blessing, the question is not really clear for me. Blessing Omoriki. You say, will my account be taxed when I pay into account? Maybe you might need to rephrase it so I will get it.
Pay into a separate account or okay, maybe she can clarify that.
Or we can go with the other ones. How do I start for get my TIN number if I give out loans to people? Go ahead.
For the question on TIN, there is a link which we will share on the chat. I don't know if Mr. Aragon can help us share that link. So there's a link, or you can type it. It's tin.gtb.gov.ng, but we'll also share the link. So if you go through that link, there's registration for individuals and non-individuals, depending on what you're registering for. Are you registering for yourself? Or are you registering for your company? So you just follow the prompt, it generates the registration ID and even gives you an email, and then your TIN will be generated. That's it. It's simple. There's also a USSD code to generate your TIN. I hope that clarifies that question. Then the question that says, do I need to upgrade my business from a sole proprietorship to a limited liability company because of this new tax regime? So this is a personal opinion, and Mr. Aragon will throw more light on it. It depends on the nature of your business and where you see your business, like I say, in the next few years or 5 years or in future. The fact that there are exemptions for small businesses, I think that's why most people are moving to open a limited liability company so that they can claim those exemptions. But the thing is that also once you cross that threshold, you'll be liable to pay those taxes. So there are taxes for the individual. So the sole proprietorship and all is like a business name. They're subject to the personal income tax. Those under the personal income tax, the low income earners, minimum wage earners, they have exemptions as well as the small business. So it depends on the nature of your business, really. So maybe Mr. Aragon will throw more light on that before I move to the next question. Mr. Ray.
Yeah. Okay. Thank you, Madam Vicky. Like you said, it's a preference. It's boils down to what you prefer. Prior to taking that decision, I think the individual needs to get the counsel of a financial advisor. Because some certain questions need be asked. If you're taking a decision on a whim, you may end up having a few had-I-knowns later on. Like Vicky said, most would want to register as a limited liability company just to take advantage of the small business exemption threshold. But while doing that, you also have it at the back of your mind that you are inadvertently kind of limiting your growth in your business. Are you going to stay a small company forever? Do you have don't you have visions for growth? So the moment you cross that threshold, you begin to be liable for all the obligations that are expected of a company that has exceeded the 100 million naira threshold. Most would want to stay as a business name because at the end of the day, you're taxed as an individual. Your business name is taxed as an individual. And the ceiling for the tax there is 25%, which is a bit lesser than the 30% that you'll have to pay as a limited liability company. So there are a number of factors that you have to consider, and but I believe that as long as you have a good business plan, as long as you keep your records in a standard format as to establish income and cash flows, you can choose to be anywhere. You can actually choose to be anywhere. The status of your business doesn't really limit you. Only the fact that you are exposed, you have more visibility as a limited liability company. There are more opportunities available to you, access to finance, access to credits, and all other things that will really spark the growth of your business. But if I just want to maintain a small setup and just get by on a daily, I don't see the need why I will need to go register as a business as a limited liability company. But still, like I said, it has to do with the individual preferences. And prior to taking such decisions, it's good to have the counsel of a professional financial expert to guide you in that decision. Yeah.
I'm going to unmute Joseph to ask questions, but these questions on the comment section, I think they have brief answers. We can just speak to them. UN staff don't pay income tax. Will this change in this new tax regime? NGO and churches don't pay tax. What's the fate of those who work in NGO and churches but earn above 800,000 naira annually? Because they are short questions, I think they are short answers.
Yeah, UN staff would not pay tax. That principle will also remain under this tax, under the emerging tax regime. I think there's a mutual agreement at the diplomatic levels that exempts United Nations staff from paying income tax. I think that principle will be maintained over the course of the conversations during the reforms process. Nobody went there, so it's untouched. It's an area that remains untouched, and the status quo remains. Then NGO and churches. Yes, NGO churches. You may not pay a company income tax, but if a church employs staff, personnel, and they earn income, such incomes are subject to personal income tax if they cross the relevant thresholds. Secondly, if the church operates an income or profit yielding business, that business is subject to the relevant taxes, VAT, withholding taxes, and if they have employees, personal income tax as well. So the church itself as an entity does not pay tax. But if there are commercial activities engaged in by the church, then you will have to pay taxes. And staff as well will have to pay taxes for their income.
we need to address the question by Grace Labaran, but Joseph, Usar, and Usaze, please ask your question. We have less than 15 minutes to go. Keep it simple and concise. Grace Labaran,
Okay.
after the oral question, we'll answer your question. Joseph Usar, please.
Good morning, everyone. Thank you, Madam Victory and Mr. Emmanuel. Please, I want to address the withholding tax and company income tax, especially when a company is not up to, especially when a company is not up to the threshold for paying the company income tax. And the withholding tax is being deducted from source. So if, let's say, I have a company and most of our transactions actually go through the category of withholding tax, and I'm being paid. That has been paid. So if my company is not up to the threshold for company income tax, is it what happens to my withholding tax? Like, is that already taxed, and or can I actually file for it to be paid or retrieved? That's one. Then the second one, as a business owner, when I want to inject cash into my company from my personal account, with that money that I'm injecting into the company account, will it be taxed, especially when it falls under the income category? Or if not, how should I describe it? Should I describe it as a loan? I know Victory mentioned something about and all that. Should I describe it in a certain way such that that money is not taxed? Then the last one is on the basis of TCC. I know Victory mentioned something about it, but I wasn't clear. Currently, when you go for your TCC, you always have this issue of they won't sign until you pay money to people in the office. I know you know what I mean, up to Oga level. This last one I encountered was very, very painful because I've done every of my tasks up to date. I just needed the auditor to get me the TCC. We agreed on the fee that we pay to the office. Then came back and told me that I have to increase that money that they did not accept. And it took more than 1 week for them to eventually approve it because they requested for a higher fee. So is there anything in place from this act that will address this issue? Thank you.
Thank you. That was 3 questions in one, kind of long. We need time to quickly process it so I can answer it in the shortest possible time because of time. If not, I would love us to answer the question of Labaran, which was noted on the comment session.
Okay, can you recap that question again? Then maybe I'll try and attempt. I think I could only get one question from Osase, but the just recap Labaran's question. Let me see if I can address it.
Okay, let me go to it again. This is, okay, if I give out loans to people and my yearly disbursement and interest is not up to 100 million, will I be taxed? If not, how do I declare my exemption?
Well, okay, you're giving out loan. That means it's a sort of business enterprise that you are engaging in. The first question I'll ask is that business registered? Is it registered as a limited liability company, or is it registered as a business name? So if it's registered as a business name,
Hello, can you see hear him? Hello, can anyone hear me?
interest, your interest inherently becomes your profit. So you're expected to declare that as your income because it's your business and you're making profit. So you're supposed to file to the relevant tax authority and pay the appropriate tax as assessed. So I think basically that's just a straightforward answer.
Okay, let's answer Joseph Osawaru's question before we go to comment session, but we have 9 minutes to end this call. Joseph asked question. Can we speak to that now? The one the person asked orally.
Sorry, is it the question about the withholding tax and company income tax?
Yes.
Okay. So, yeah, you are you're a small company. The deduction of tax at source withholding regulations provides relief for you not to pay withholding tax, but there's a caveat. First of all, the supplier that you're having the transaction with must have a taxpayer identification number. That's what the regulation says. So if you're a small company and you're transacting with a supplier without a taxpayer identification number, you are expected to withhold and remit accordingly. But if the supplier has a taxpayer identification number, yes, there's another consideration to have in mind. If the supply is below 2 million naira, you're not supposed to withhold. But when the supply is above 2 million naira, the small company is expected to withhold. So those are the caveats. Yes, you are expected to, yes, there are exemptions from not withholding, but there are thresholds and there are conditions which the supplier must meet before you can exempt them from withholding tax on their behalf. And like we rightly said, I don't know if it's been mentioned, withholding tax is like an advance payment of your income tax. So whatever taxes you've withheld, you remit. Whatever taxes has been withheld from you, with your credit note, you can seek for refund at the end of the year. It's like an advance payment of your income tax. Whatever you've paid will be net off the final established tax that you'll be asked to pay as your income tax. And if what you have paid is more than the income that has been assessed, then you are entitled to a refund. So
thank you. But there's a part you
yeah.
noted about the bureaucracy. Kickback.
Yeah. Well, okay. I think that has to do with tax clearance certificates. Someone was talking about the tax clearance certificates and the bureaucratic bottlenecks that associated with the issuance. Yes, I will not totally discountenance that assertion. Really, some revenue authorities, due to the aggressive nature of their revenue drive, would want to form preconditions that are not contained in the tax laws before issuing a tax clearance certificate. This practice is wrong. This practice is wrong, and I believe that with the enhanced reporting channels that we have and the grievance management mechanisms that have been introduced by the reforms through the tax ombud, taxpayers will have a platform for making the complaints when faced with such bureaucratic bottlenecks. So the law prescribes that if I apply for a tax clearance, there is a specific time frame in which the revenue authority is expected to produce and issue that tax clearance, especially when I've met all the statutory conditions that are required. So introducing foreign conditions for the issuance of a tax clearance, it's wrong, it's unprofessional, and it's something that we believe that we can address with the emerging reforms. Thank you.
Thank you very much. Ustaz, I've been trying to ask you to unmute, you are not responding. So I have these questions. Somebody said, I've gotten my TIN certificates sent to my mail. Based on the link that was sent, somebody engaged it and has gotten a certificate. That's Joy Nabulele. I have these questions. We have
that's great.
5 minutes to go. Ogiole said, please, I want to ask, as a painter who received cash to buy materials to the tune of 1 million, and if my workmanship is 700,000, and I will need to pay my workers, give me a clear view on that. Let's take that. Then Shegun said, is inflation also factored into the tax, especially for the capital gain of assets? Would there be exemption if inflation increases? And Murphy said, for a trader, my business is registered with a business name. I make sales of goods every day and I use all the money to purchase more goods. How do I get taxed? I don't know if these three questions are clear. We might not be able to take more, but Victory is doing well to answer your questions in the comment section. So also read the comment section. Let's see how these three questions go with the short time we have.
Okay, let me start from the last question. I trade, I do daily buying and selling, and how do I get taxed? Well, depending on the volume of your trade, you will be liable to taxation, you know. But the advice, like,
excuse me. I guess his network is frozen. Victor, would you like to jump in at this point? Assuming that we are
Okay. I'm not sure the question he was answering, but let me answer Ikedo's question.
Okay, go ahead. Yeah.
Where he says, please, I want to ask, as a painter who received cash to buy materials to the tune of 1 million naira, and if my workmanship is 700,000, and I would need to pay my workers, give me a clear view on that. So I'm assuming that this cash, it was paid into your account, or was it received by cash in hand, as the case may be. So the onus is on you to file your returns. You are allowed deductibles, your expenses, what you used to buy your materials, what you used to pay your workers or your staff, as the case may be. It's your income that government is interested in. So if your income is 700,000 naira, is that 7,000 naira? Is it one-off? Is it annual? As the case may be. So you are subject to tax on your income. And again, if it's below the threshold, you are exempt from tax. Also, as a painter, because this question is not very clear, is it a limited liability or you're just doing it on the side? So, if you have registered as a limited liability and you now fall under the small company, that means you're exempt from certain taxes. But if you're operating it as a business name, which is under the personal income tax, the tax band will apply to you. So also, are you below? Because if the 700,000 is for a month, that means it's 700,000 times 12 months. Remember, the tax band for the first 800 is for the annual, that's 12 months. So it also depends. But yes, you're allowed to take off your expenses and make those deductions.
Okay.
But you must file, because if you don't file, the tax man might come tomorrow and say, oh, we saw 1 million naira in your account, and then it might be too late to explain. Yes, that's it.
Let's jump to the other one because of time. Shegun asks, is inflation also factored into the tax, especially for capital gain of asset? Will there be exemption if inflation increases? If we answer faster, we can take 1 or 2, 3 more because we are at the point of closing.
Okay, so far from the tax laws, I've not seen any place where inflation is literally taken into consideration. But I know for the capital gains tax, and I was even having this discussion with my brother yesterday, and he's even on the call, and I've told him to help answer some questions as well. For capital gains tax, your losses, incomes, your losses is netted against what you made, your gains, and then that is what is taxed. So I want to believe that if you want to use that term inflation, maybe that's where people made losses, or as the case may be. But the law doesn't literally speak on inflation. So that's it for is that virtual
Wisdom,
assets?
right?
Yes, Wisdom is on the call.
I've spotlighted Wisdom. Answer the other question before I unmute Wisdom. We are really pressed for time. There's
Okay, what's next?
Can a small business have a TIN number. I know that's there, yes or no.
Yes, that's yes. So
Okay.
Mr. Emmanuel is trying to get back in.
Okay,
I'm sure it's his
once he
network.
gets back, I'll do. Okay. Also, if I'm sent Bitcoin by a friend as a gift due to the fact that he can't send using local bank, will I still be taxed for it? Yes or no?
So if the gift is really a gift, you would not be taxed for it, and there's a description to it. There's a description to it. If you are sending it to someone because you can't send to the bank account or as the case may be, no, you will not be taxed for it.
Okay. Before I meet wisdom, I have this one that says, for a trader, my business is registered with a business name. I make sales of goods every day and use all the money to purchase more goods. How do I get taxed?
So for a trader, you make sales every
Sales
day.
every day and use all the money to purchase more goods.
Okay, so it's important even as a trader to keep records. You must know what your capital is. So is your capital 1 million naira? Is it 100,000 naira? What did you use to purchase your goods? It's important to keep records. What was your income or gain? So if I buy something 5 naira, I probably made a gain of 1 naira. That gain is my income. So you must keep accurate records. Whether you are taking it back to buy goods and all, there must be records for it. So the whole essence is to keep accurate records. So you'll be able to monitor.
Question, then I'll have unmuted wisdom. Like I said, this conversation can keep coming ongoing on the firm business community. It's not a one-off, it's a continuous thing. So those of you in the firm business community, leverage that forum for this conversation such as this and others. I am an event planner, but my business is not registered yet. I receive different amounts of money depending on the job I'm doing for them. Will I be taxed at the end of the year? I think they have spoken to it already.
Yes, I answer that.
Wisdom. Will you please?
Hi, Pastor Derek. Good morning.
Good morning. Quickly speak to this. We are good to go.
Okay, sorry, I didn't get the question.
You wanted to make okay. Go on, sir.
If I'm sent Bitcoin by a friend as a gift due to the fact that I can't send using local bank, will I be taxed for it? One. The other one is inflation also factored into the tax, especially for the capital gain of assets? Will there be exemption if inflation increases?
Okay, for the Bitcoin, as Victory had rightly said, it's is it really a gift? If it's a gift, it has a threshold, but how will I put it? It has a threshold for the amount of what is seen as a gift, because you know that someone that might go through your account and you say it's a gift, it still calls for like an audit on your own account.
Network. Victory, you want to jump in?
It's the network. So okay. Is it up now?
Okay, sorry.
We lost you.
Can you hear me?
Yes.
We can hear you now.
Yes, network is not so good. All right, Victory, let's tie it up. Sorry for that. If your question was not taken, it's not intentional, please. And if you need further advice, clarity, registration, that's why we have the firm business community. It's a network of business community of firm builders. We are just nursing and incubating growth together. Victor, please go ahead.
Okay, so thank you, everyone. Whatever questions we're not able to answer, I'm always available, and most of us already have my number. I'm sure Pastor Derek will share the number as well. And me and my team, we are available to answer questions, to provide clarity. And even in the coming year, we know that even in January 1st, we'll struggle even up until April for these things to actually take effect. So if there are any questions at any point in time, even after this meeting, I'm available to answer questions. Whatever one is above my tax brackets, I'll pass it on to the experts to answer. So thank you, everyone, for this. But what I actually want to say is, in this new tax regime, there's no reason to be afraid. Let's block off the news from the media. I'm also going to send in links, verified links. Is either you get your information from JTB or the Fiscal Reforms Committee. Leave content creators. A lot of people are trying to make money. So any content creator, in fact, right now, the Fiscal Reforms has identified 20 content creators to which people should get in their information from. They are training them currently as we speak. So when that is done, we'll share it so that people don't just get informations everywhere, that the monies, in fact, a lot of people have called from abroad, my monies will be taxed. If you pay money, they will tax it. No, that's not true. So let's dissuade ourselves of those things. And then if you have any questions, always seek clarifications.
All right,
Thank you so much.
So what I'll do to make it a bit systemized, Victory will just also be part of the FEM business community so that it's a system. All right, we keep that group active. We'll have this conversation probably next year, because every month we are going to be having conversations like this, depending on which issue and the trajectory of the nation, as it were. So if you're not part of the FEM business community yet, I've dropped the WhatsApp number there. This conversation will continue. We need clarity, registration, anything business community. But please, the philosophy behind this is that in the Jewish culture, when they do business, they keep the wealth within the family. The money rotates about 17 to 18 times before it goes out. So we encourage, we do business within ourselves. I know there are reservations for some reasons, but our business does not stop the use. We also encourage, we grow together, we coach together, we mentor together, we co-create wealth together. That's what this community is about. Having said that, Victory, thank you so much for coming. Please, Emmanuel is no more on the call. Tell him we appreciate his time. We'll come knocking again. Wisdom Network did not allow you to share your weight of knowledge, but we'll have another time for this. For everyone all over the world who joined this call, we appreciate you. Let's build on this momentum. Victory, you are awesome. Thank you. On behalf of Remy Ben and Pastor K, the lead pastor of FEM Foundation and the one who endorsed the FEM business community, thank you for joining, and thank you, Remy and Pastor K. Let's have a lovely weekend. Shalom.
Thank you, Pastor. Shalom.
Every other comment, drop it on the WhatsApp group or question. Bye-bye.